Awesome. All right. So, just like what I said, for cryptocurrency, there are certain analysis that I do not really implement, and there are certain analysis that I tend to, stretch upon. Now, the reason is that the fundamentals, though they seem similar, right, but they vary slightly, because you need to look at the sphere. You need to look at the ecosystem. The kind of traders that are present in the crypto space are overly different from the kind of traders that are present in the foreign exchange market, right? So these two different field of traders also influence how the market moves, and you need to have that in mind when you're doing your analysis. For example, when you look at the sphere of crypto traders, we are easily looking at people that don't want to spend time looking at screen, people that want to make a lot of money from the market. We have billionaires coming on board who see it as a platform to really just leverage upon the massive rise of this platform and make money from it as well. What else are we looking at? We're looking at the dynamics of inexperienced traders as well coming on board. So all of these things can be factored into how you view the market. So what moves the market is the first question, all right? What moves the market? You and I understand that it's liquidity that moves the market, right? It's the money, right? Whatever we see as a candlestick, it simply talks of a price action. It simply talks of money moving, either buying a particular security or selling a particular security. Now, you now ask yourself, what influences the judgment behind traders, idea or traders' dynamics on trades, right? And you begin to see that it all boils to, first and foremost, their professionality in terms of the trading and the kind of trade they want to execute. All right, so we've answered that aspect. So let's bring it into more practical terms. Now, look at this. If a billionaire, for example, comes on board and invests like $1 billion into crypto, right, and buys a particular coin, right, that money is automatically reflected in the space, right? You see a massive push up in price depending on the direction on which that billionaire is buying that, the currency, right? And what follows up now when there is this push, there's this shift in momentum that happens, right, on that particular coin. The next thing that follows up are inexperienced traders seeing that as a momentum, seeing that as an opportunity, and then they jump on it. So what does that do? That further pushes the price on a certain direction. All right, so it's the psychology of trading. All right, so that pushes the price in a certain direction. Now, which and the moment these billionaires have made the money they want to make, they cash out. All right, it could be a venture capitalist firm. It could be a market maker or someone just trying to influence price by pushing it, and then they remove the money, the market falls, and then everybody gets scared. Some of them still feel like the market will go back, they hold on, others remove their money, the market falls rapidly. All of those things, you can begin to see them play out on the chart. You can see them play out live on the chart. All right. So what I do, because I understand this dynamics, and I also know that traders are not that technical when they trade cryptocurrency, so I don't tend to bring a lot of technical analysis right into crypto trading. All I look at for is support and resistance, because that is what majority of traders understand. All right, then I go as far as adding RSI just to see what the institutional traders are doing on the crypto space. That is basically what I do, and over time I have seen that has given me some form of accuracy in predicting what cryptocurrencies, what these alternate coins do over time, and it has worked. All right, so I'm going to show you real quick how I do that. So looking at this, the first thing I do is that I work with higher time frames. All right, I work with higher time frames because majority of these traders are long-term traders. They are huge liquidity traders. So that simply means that they cannot easily get into the market and leave. All right, so let me explain that. before a particular trade pushes through, we have buyers, we have sellers, right? And if you want to buy, it simply means that there must be somebody that wants to sell to you, right? So if, for example, you want to buy ₦1 billion worth of a particular commodity, right? If you don't have a seller that can measure up to a ₦1 billion worth of that commodity, that simply means that you can't buy 1 billion, all right? So you have to wait for the, what do they call it? The, the commodity to build up in size before you can actually take, or what you can do is decide to buy little by little, all right? So that idea simply means that, majority of the people that really move the market are not short-term traders on the cryptocurrency space. They're not short traders. They are long-term traders, right? And they can't simply execute their trades automatically. So they tend to take that trade little by little over time. So which simply means that they are looking at the high time frame, the larger time frame, not the 15 minutes, not the 1 hour, right? I don't really concern myself with that. So what I do is that I go as far as 1 week, 1 day, and then I drop to at least minimum 4 hours to really see what is happening. So for this analysis, what we're going to do is just look at 1 day because we don't have much time. All right, so looking at this, we have 1 day, and you can see what I just did here was basically isolate the highest point the market got to, and this was around December last year. And right now we're seeing the lowest point here, which was around June, all right, June 18, and the market has picked up since then. Now, this is a very tricky market, all right? It's a very tricky one. Now, why is this market tricky? Because you see what I did, I added 3 indicators on this page, and these are moving averages. So what moving averages do is that they smoothen price over time. And what I have here are just basically 3 moving averages. I have the 13 EMA, I have the 50 EMA, and I have the 200 EMA, right? The 200 EMA is the gray one here. You can see. So they smoothen price. They tend to flatten all of those oscillations that happen in the market so that, they don't really conflict with what I'm seeing. And there is something very important about moving averages, and that is institutional traders do not draw trend lines. I just said something very powerful. Institutional traders do not draw trend lines. What they do is that they use moving averages. So the moving averages are what they see as support and resistance. All right. So if you look at this, specifically the 200 EMA. So if you look at professional charts, you tend to see more of the 200 EMA, and that is why I added it here on my chart just to see what they are seeing. All right. So if you look at this clearly, you can see that the 200 EMA here, all right, is on a bearish trend, right? It's on a bearish market. So the idea is if the market is moving above the EMA, it's a bullish trend. If it's moving below the EMA, it's a bearish trend. So we can see here that this market has been bullish over time, and then, came here, consolidated, broke the EMA, came down, and now it's selling below the 200 EMA. All right. So I just added the 50 and the 13 just to see that volatility a little bit, just to get that volatility out of the setup. All right. So we look at this. So I've marked this point, which is the highest point the market has gotten to over time. And then I've marked, EMA, exponential moving average. All right. So EMA is exponential moving average. All right. We have simple moving average and we have exponential. So the simple moving average, it still oscillates price just like the EMA, just that it does that on a slower, progression. All right. So it's slower than the EMA. So the EMA is able to get that feedback quickly, all right? It's able to give you price feedback quicker than the simple EMA. There are some traders that prefer the simple EMA because they don't want that volatility. They know that volatility can be misleading. So they just stay away from the volatility. They put the simple one and just let the market smooth out, right? But for there are traders like myself, I want to still see that volatility a little bit, all right? So I want to see what is currently happening. And so I use exponential moving average. So it aggregates price on an exponential level, which makes it faster, all right? So what we see here, I just marked out this point here. I marked out this point here. All right, so I've gotten my 2 points. Now, the next thing I want to do is that, like I said, there's no rocket science to drawing support and resistance. It's all about what you are able to see. And for me, I like support and resistance points where support turns into resistance and resistance turns into support. Those points are key. Those points have, a higher tendency for price to, show some form of reaction. So when I'm looking at this, the first point I'm seeing right here is this the tip here. All right. So I'm seeing this point is so clear. I can't miss it. All right. I can't miss it because why? You can see price is currently at that same level. Amazing stuff. All right. So it's that easy. You don't have to, there's no rocket science to it. All right. So we can do this. Okay. So we got this point. We got this kind of midline right here. We got this. All right. So we can see what price is currently doing within this place. Now, for me, actually, most times I do not concern myself with what price are done, right? I look at what price is currently doing, right? So that tells me more than what price has done, all right? So I can decide to, leave all of this, right? Neglect all of this motion here and focus on just this point, right? By dropping down to a lower time frame. But, just for convenience sake, I will also just quickly do this so that you can see it clearly. So I can see this point here. All right, market has respected it twice. It's a nice one. I can see this one here. This one is a nice one as well. Remember, support and resistance are not straight lines, they are zones, but we are using lines for now. All right, they're zones. All right, so we've gotten this, we've gotten this, we've gotten this, we've gotten this. All right, so the last one I can see, right, that is also as clear as day is this region here. All right, we're using lines. These are not supposed to be lines. Know that. All right, so let me just do this and move it down here. All right, so we've isolated all the key points that the market will respond to. All right, we've isolated them. Actually, you'll see reactions when the market gets to this point. All right, so we want to drop down to 4 hours. All right, so these are basically the 2 time frames I use a lot for cryptocurrencies. I don't really concern myself with the lower time frame because I too I treat cryptocurrencies like institutional traders. So, all right, so my mouse is misbehaving, so I can't really scroll through easily. So just bear with me. I have to move like this. Okay. All right. So we are seeing this. This is current reaction. This is what the market is currently doing right now. Right now. And up from my head, I already see a cycle, a complete Elliott wave cycle. All right. I see it clearly. All right. And how am I going to show you that right now? Okay. So let's quickly look at this. I see this as, a W pattern. All right. Okay. All right. So we see this. The market has been coming down here. So this can be referred to as more like an ABC pattern, right? Forming right here. And market peaked right here. Now, the beautiful thing is that if I add an RSI, you will see that there's a deviation here. I promise you will see that. All right. So right at this point, you will see a deviation. Should I do that right now? We don't have time. I will have added one more indicator to this chart. All right. So if I put an RSI price line here, you can check that yourself. You will notice that there's a deviation here. All right. So the RSI will be consolidating price upward while this has been falling down. I promise you, you'll see that. All right. So the moment that happened right here, this became our baseline, right? So this became our resting phase for the market. So what I'm going to do is that I'm not going to use, this. Where's this thing? Okay. All right. So I'm going to use this. All right. So I block out that point right here. Just want to see that so that I have a reference point. And the next thing that we see is a push up in price. And this push up in price actually began a cycle. All right. So I can see that happen right here. First things first, I want to do this as well. I want to draw a trend line for those people that love trend line analysis. I love trend line too, but there's a way I use it. Okay, so I put that there. So I've gotten this out of it. Also, you can see how the market respected it over time. We can extend this out just in case price comes back to retest that point, which we are currently looking at right now. Okay, so that is that. So let's come back to this point here. So I see this push in price, I see this shift in momentum. You can see right here, you can see how the market caught through the 50 EMA. You can see how all of this has been coming down. This began the cycle, right? It caught through all of this EMA, changed the dynamics, right, of the trade. And I can call this my shift, right? So this can become my point. I can call this my point 0 to 1. I can call this my point 0 to 1. Okay. All right, so I can see this shift here. It came back to retest this trend line, right? But at this point, you know, I can easily just add, what's this thing called? Fibonacci retracement. Why am I looking for all of these things today? Okay. Okay, so we can easily use that. You can put that right there. All right, just to see the retracement. You can see this is around 61.8% retracement. Perfect setup, right? I like that. You can see how it pushed up right here, came back down. You can see it right here. This is the line. All right, so this is around 61.8% retracement. All right, so I don't need that right now. So I'm gonna remove that. Okay, so that justifies this as my first push in price. So what I want to do is I want to see the next push. You can see how it went all the way, right, from this point here to this point. Now, for most persons, they want to take this point, but this point is not really the true point because the second leg has to be higher, right? So for me, I'll take this point as my second leg. Take this point as my second leg. All right, so there's no rocket way to do this. Just see that. Okay, so if I can also do this just to see, right? So this is my push, right? This is my push one. So I'm going to take this, right? I'm going to put it at let's say this point. Look at this point. So I'm looking at the shift out of the range. All right, so you can see this. All right, so assuming we're doing, you know, based on range, right? Because the market cycle has to be in some form of correlation, right? They have to correlate each other. So I'm looking at this right now. So you can see here, this push from this point here to this point here, right? So it's more than what we had here. Remember, I told you the second leg has to be what, higher. So that justifies it, that this is my second push out of the range. All right. So this can be tagged my 0. This can be tagged my 1. This can be tagged my 2, right? So this from here to here is my third wave, right? Is 1, 2, 3 is my third wave. So between 0.2 and 3. So I can see that it's clear. It's clear. So all right, I'm gonna get this out. All right, so we are currently right here. So you can see from this point here, this is the last phase. You can see how the market pushed right here, came back down. So this is from my 0.2 to my 0.3. Here's my 0.4. So we're looking at 0.4 to 0.5. Now, usually when we get that 0.4 to 0.5, we're waiting to see some kind of, you know, reaction. Either the market is trying to reverse its direction, or, you know, the market is trying to continue in that direction. So we call that continuation a reset of the cycle. So the market resets the cycle and continues on a bullish trend, or it can simply reverse and then go on a downward direction. So we were expecting this already at this point. So at this point here, you can see what happened. The market came all the way down. Now, this was not the retest, right? The fifth leg has to be a little bit higher than, you know, that point. So I knew that definitely was going to go a little bit higher than that. So we saw this right here. So we can as well do this just to mark it out. So we are confident that we have all the points marked out. Awesome. All right, so I'm seeing this cycle. Okay, so one full cycle is complete right here. All right, so the market did this, came back down right here, completed this cycle right here, right? This is on a 4 hours time frame. So what are we expecting to see at this point, right? Now, this is why this trend line we drew here is so important, right? Now, there are two things that can happen right here. Two things. The market, continues in the direction, right? By, first of all, it has broken this right here. All right, so it broke through this point right here. I'm going to put this out. All right, so we can see that. You can see what the market did, created the fifth leg, came back. So we'll want to see some kind of ABC corrective pattern, right? And then the market continues, right? So what we are seeing right here, this can be regarded as an A point, right? So we're yet to see the B and the C point, right? That is how we know that, okay, we're going to get some kind of bullish, rise. Now, this is the thing. Our B point, right, is going to be between this point here and this point here. The market is not going to just break through this point and just start flying all the way up. No. What it's going to do is that at this point here, we'll see some form of reaction between this point and this point. The market will definitely get to this point, right now. So this can even be some kind of information for you if you want to trade Matic, right? You're already on this point right here. You know that the market will get here. So around this point or this point, you should be looking out to at least probably switch your coin for the meantime and then see how the market responds to this point and then switch back in. All right. So what we are seeing right here, the market is going to do something of this nature, come around this point, retest this point to give us an info of what it's doing. Also, right here, we can see a little bit of pattern right here. So if I drop this, though I don't like dropping to the 2 hours time frame, you will see that this is a clear W pattern, right? That's formed. Let me just do this real quick. All right. So you can see right here, you can see this. All right. So the market did this W pattern, retested this, came back down to it 3 times. All right. So if the market tests a point 3 times and does not break that point, that's a sure signal for you. All right. So that's a sure signal. If I were to trade this, I would have entered this place right here at this price action. Look at that price action on the 2 hours. Look at this. This is a hammerhead. This is a hammerhead candlestick right there. I'm going to zoom this in so that you can see it. Look at this. This is a beautiful setup. Just look at this. Amazing, right? So the moment I saw this coming down to retest this same point, this is a region, right? This is a region. You can see the exhaustion of these candles. Look at the exhaustion here. Each time it came here, it could not break it. Each time it came here, it retested this point. Actually, it retested it 4 times. Look at this. This was the first time here, right? Went back up, came down to test it again. We had this bullish engulfing candle right here. This was a clear indicator that the market was going to buy. So if you are taking this on this from this point here to this point here, you'd have made a little bit of profit. So you saw this motion here. It came back down. Look at this. This is more like a tweezer bottom. Look at this, right? 2 candles straight to this point. Exhaustion still went back all the way up. Remember, all of these are happening. At that point, right? Okay. So let's just do this. You can see what happened. Went back up, touched this trend line, came back down, and then gave us again. This was just the determinant, right? This was a hammerhead candlestick followed by this. So if I had this, and this is a morning star, right? Some kind of morning star, right? Though not a perfect one, right? But if I add these 3 candles together, this gives me some kind of morning star. So this is a price action at a key support level, right? I knew this market was going to buy, right? So at this point, you can see how the market bought, came back. We can even calculate a little bit of, we call this a mini Elliott wave, all right? So the Elliott wave cycle, in every time frame, there are mini cycles, all right? So you can see this little cycle that happened here. So this is 1, this is 2, this is 3. So we are at this 5th point. So we are definitely going to see a reaction at this point, right? So what I want to do is, having that at the back of my mind, all right, we're going to see some form of reaction, but on the larger scale, right? We're already seeing this on a larger time frame. So if you are dropped to the lower time frame, or if you're a day trader, you're looking out to cash out right here, right? But on the longer time frame, the 4 hours, which we just came back from, right? On the 4 hours, you can see clearly, right? On the 4 hours, you can see clearly that this motion is not complete yet, right? So there's still going to be a push in price, right? The market is going to get somewhere around this point, see some form of reaction, either here or here, right? Drop back down, and then that will be the determinant. All right, that will be the determinant. So what I mean, that will be the determinant on what is going to happen if the market has changed this direction, or if the market is going to continue its direction. Because what we're going to do then is just basically take a trend line, because we will now have 2 points. All right, we will now have 2 points. All right, so if the market comes back down, you can see this. So this will not be a point for us to watch out for, right? So this can also be some kind of triangular pattern setting up. It's beautiful if you are able to put all of this information together, and you're seeing the clear picture. You're seeing the clear picture. It's as clear as day, right? So you see what the market is going to do right here. Look at this. It's going to do right here, right? So around this point, we're going to see some form of reaction still, right? What happens next is going to be the determinant. Like I said, it's either the market responds to this trend line and breaks out of this range, comes back to retest it around here, and then you see the market follows up and continues buying, right? And this entire move right here will be a fake out, right? If you take it to the higher time frame, to be a fake out. So let's just take it to, those people that do like a monthly thing, like those guys that do like a monthly thing. Okay, I thought we're still going to see stuffs on the monthly time frame. Okay, let me drop down to 1 week. Okay, so this is 1 week. This is 1 week. Wonderful. All right, so this is 1 week. Remember that I just told you, I said all of this is a fake out. So you can see right here, this is just one simple red candle all the way down. 1 week, one red candle all the way down, right? So this right here on the, the larger time frame could just be a fake out, right? The market is just trying to just raffle people up a little bit, and then you can see the market will just bounce back. But what we are seeing that this also could be, a bearish engulfing candle, right? Happening on the higher time frame, which simply means that the market is going to sell, right? So all of this information will come together to tell us what is going to happen. Remember, these are key points. You can see it. You can see how those points that we marked out, you can see how they are key. Just look at how they are key, right? So we can as well, see this as a strong resistance point, and this being a bearish engulfing candle, which signifies that the market is going to continue selling, right, on a higher time frame. But it's not enough for us to just jump into what is currently happening. So we want to drop down. That's why I like using the 4 hours and the 1 hour. All right, so on the 4 hours, so we can now see clearly what is currently happening. It's like something is setting up right here. Look at this. Something is setting up right here. So what is going to happen to this? Is it going to break out of this point? If it breaks out of this point and test this point, cannot break it, what we're going to see next is a bullish rise. That means that entire red candle is just a fake out, and the market is going to continue on the bullish ride, right? So we're expecting, Matic currently is around 0.8, that's 80 cents. We're expecting to see minimum a rise above $1, right? A rise above $1, right? I bought Matic at 0.4, I think 0.4 or 0.5, right? So I'm already 100% in profit, right? Like this. But with that alone, that can give me close to 200% returns on Matic. So that is the idea. That's the kind of trading system you want to be able to adopt. Be able to see what the market is doing for its real context, right? Analyze. You're not panicking. You're not trying to trade it where you are trading the forex market, taking a position short term and all of those stuff. You want to see the bigger picture. All right, you want to see the bigger picture, and there's no rush. There's no rush in it. There's no criteria that you miss one thing, you're going to miss all the money. No, just let the market show you what to do, and then you take the trade, right? So that is basically it for. So let's do this. Let's drop down a little bit. Okay, so that is just it for Matic. You can see, remember, Matic is the coin for Polygon. Polygon is some kind of a layer 2 solution to Ethereum scalability issue. So if you tie this micro analysis that we just did to the larger macro concept, which is, there's going to be a merger very soon for Ethereum, right? And over time, we've seen that Matic has responded closely to Ethereum analysis. So what that just does for us is that when that merge happens, which is going to happen within September, October period, right? When that merge happens, right, we're going to see an impulsive move as well for Matic on the bullish direction, right? So all of this push out of this range could just be the setup, right? The market is trying to set up, try to, get those weak traders out of it before it actually does, what it's going to do on the long term. All right, so that is it. How many minutes was that? I hope we stayed in time. So is there any question real quick before we call it a day? Any question? Ramzo, welcome. Victory, Favor, Sosa, Mr. Joshua, thank you for joining in. All right. So is there a question? Any question? Okay. So I want to believe that this was very clear. Please, guys, always do your analysis. Don't take my word for it. Go back, do your research, get more information, try to look at the charts yourself. You might just get an insight. This is raw analysis. We just did this analysis live, right? So I'm going to take a screenshot of this. I'm going to upload it on the group. And please stay active on Digital Cashpoint. Take charge of what we are offering and then just grow your wealth considerably. Also, I want to take the opportunity to thank Mr. Joshua for the signals that was dropped today. We made massive profits. I want to hope and I believe that you guys also took an advantage of that. All right. Thank you guys. Till next time, I remain Olelo Sylvester, and thank you for joining me today.